The information provided in this program is of a general nature and is not intended to be personalised financial advice. We encourage you to seek appropriate advice from a qualified professional to suit your individual circumstances. The SEC launches an offensive against Binance and Coinbase. So are your crypto assets safe?
It's not a very constructive way to regulate a growing business or a growing industry.
Apple prices its latest product at triple the price of a new iPhone. Could the Vision Pro offset its declining revenue?
If they sold 1 million headsets, that would be only 3.5 billion, which is less than 1% of Apple's revenue. So that wouldn't actually be moving the needle for Apple at all.
It's Friday the 9th of June and you're watching Markets with Madison. The world's two biggest crypto exchanges are being sued by the US investments regulator. Binance US and Coinbase have been charged for different things, but their founders say it's all an attack on the industry. It started on Tuesday with a 136-page document alleging Binance and its founder knowingly evaded US laws and solicited American investors to trade crypto on its unregistered platforms via social media, putting billions of US dollars at risk. The charges go after founder Changpeng Zhao, also known as CZ, directly, alleging investors' funds were commingled and accounts controlled by him, and that he engaged in wash trading to inflate the volume of crypto on the Binance US platform. Binance's official statement says it's disheartened and disappointed by the SEC actions. It said it intends to defend the platform vigorously and that all user assets on Binance are safe and secure and have never been at risk. Yet the case reportedly led users to pull money out of the platform this week. The case against Coinbase has less teeth. It only alleges that it's broken the law by being unregistered, depriving investors of usual protections. It does not go after its founder and chief executive, Brian Armstrong.
Whether you like cryptocurrency or not, most of the world is embracing this technology now.
Armstrong took to Twitter saying there is no path to come in and register. We tried. It dropped this YouTube video saying it met with the SEC 30 times last year asking for guidance. Coinbase is listed on the NASDAQ. Its stock dropped 12% on the day the case was launched. It's the world's second largest crypto exchange, under Binance, which is the biggest by a long shot. It has an average daily trading volume of 65 billion US dollars and has 120 million customers. But are their investments safe amid a regulatory onslaught? New Zealand's leading cryptocurrency lawyer, Jeremy Muir, weighs in. Jeremy, good to chat to you. Thanks for your time.
Hi, good to be here.
Is this SEC action an attack on the crypto industry?
Yes, to a degree, or it is a regulatory action in the United States. It's important to be clear that this is very much a jurisdictional matter for America, and in particular for the SEC, which has been trying for a long time to establish its position as the right regulator for crypto markets in the US.
Are investors' crypto assets safe? I note that the SEC has put in a court order to try and freeze crypto assets around the world.
Whether there are actually any risks to people's assets, that's not clear at this stage. Certainly not on the Coinbase side. Or there's nothing in the action against Coinbase, which is very much expressed as you're not meeting the regulatory standards, you need a license, you need to do certain things. The action against Binance has a lot more bells and whistles thrown in. It has previous employees testifying, and it has a large flavour of consciously trying to not be regulated in the US, but also to have US customers. And there are things in there around movements of assets and other things, which, if it was a regulated exchange, would be problematic. So nothing to say at this stage that assets are not safe, other than from usual market volatility in this space, which is fun enough.
Can we trust the SEC on this? And I ask that question because FTX happened. They didn't take any action or see that coming ahead of time.
Look, it's hard to be a regulator. And as a regulator, they are dealing with some legislation which is intentionally and purposefully very broad, designed to give them the power to sweep in and save the day. But yet it has made it difficult for them to be definitive with some of these exchanges up to this point. So can we trust them? I'm sure their interests, they have the best interests of investors at heart. As to whether they're getting it right, opinions differ. I've certainly seen a lot of commentary in the sort of blockchain crypto world over the last couple of days saying, I trust the SEC less than I trust Binance, and that's not, necessarily going so far in those people's opinions. But the SEC is trying to do something. It is trying to limit the exposure of retail investors, primarily in America, to exchanges which don't have all of the protections of large equities exchanges. So, that I think is what's behind it. But there are all sorts of arguments that you can make that it's not a very constructive way to regulate a growing business or a growing industry.
Yeah, it's an interesting one, right? Because even if you just look at Binance globally, it says 120 million customers worldwide. So it's almost like investors have moved well ahead of any regulation on this industry. So is this too little, too late from the SEC?
Well, time will tell, but I think it's not a very constructive way to build a way forward. You can compare it to, for example, the European Union, which has spent quite a lot of time developing a comprehensive framework for crypto assets, which involves licensing in jurisdictions. It's designed to be fit for purpose. And, they are now starting to move forward in a way which has a lot more certainty around it. Whereas in the US, they're still trying to pin down whether certain types of crypto assets like Ethereum, second largest by market capitalization, is it a security or not? The SEC won't say, although it was not one of the ones named as being a security in these actions.
Yeah, what do you think of the actions that the SEC and their legal argument, both against Binance and Coinbase? Coinbase says that it tried to get registered, that it went to the SEC 30 times last year and it didn't get any advice. And Binance says that it's not even a US platform, so it actually doesn't even come under the jurisdiction of the SEC. So have they got this right legally, do you think?
I think that's highly debatable, and it will be proved in court if it gets that far one way or another. The issue with the way that the SEC has tried to regulate this industry to date is that it has been sort of cherry-picking enforcement actions to get a lot of rulings or agreed settlements with people who don't really want to fight. And it hasn't really been tested or had to be tested in court as to whether the line it's taking in relation to so many crypto or digital assets being securities is right or not. There's a long-standing argument or case that it's been having with Ripple, for example, another cryptocurrency, which hasn't been by any means resolved. So, they are definitely moving ahead of where the clarity of the law stands. And they're doing that, I suspect, because they feel that they have to, or because they feel that's the most effective way to get their point across, or at least to make people think twice. But it does make it very hard for businesses, particularly like Coinbase, a NASDAQ-listed company trying to do everything right, having a large compliance network, actually trying to work in the United States. And for Binance as well, it's fair to say that the reason that they're forced into trying to make arguments that they're about not being in the United States is probably because they thought the United States was very unclear as to how they were going to regulate them, which is kind of a fair point.
Do you think regulators in other countries, possibly in New Zealand, could follow suit?
Well, New Zealand is a very interesting case because, frankly, the law is different. So the particular point upon which the whole American uncertainty rests as to whether these products are regulated securities has been dealt with differently under our relatively recent Financial Markets Conduct Act. Rather than having a very broad catch-all definition of a security which potentially brings anything in, we regulate financial products and financial advice products which are much more narrowly defined. And therefore, you can say with some degree of certainty which assets fall within that definition and are regulated in a certain way, and which assets fall outside. And to give some further protection, the Financial Markets Authority then has a call-in power over a wider category, which could include most crypto assets, to say, let's bring them in and treat them as equity securities or debt securities if we need to. So we just don't have the same conceptual issue in New Zealand. So it's much easier to be an exchange in New Zealand. Having said that, whether that means that our exchanges have the right type of regulation, at the moment it relies quite a lot on voluntary disclosure and the general powers that, say, the Financial Markets Authority has to prevent misleading or deceptive behaviour in the markets. As to whether we've got it right or not, that remains to be seen as well. But at the moment, we just don't have the size of market, the number of exchanges, or otherwise that would perhaps warrant creating a bespoke regime. So I think we're looking quite closely at what places like Europe have done, what places like Australia have done, and with interest, but maybe not as a follower for what's going on in the US.
A lot has happened in crypto just this week. What do you think could be the best and worst case scenario for crypto investors who have any assets in Coinbase or in Binance in the States?
Well, I don't think anything's going to happen quickly, at least in relation to court proceedings or otherwise, although it is always possible that one or both of them could enter into some kind of settlement with the SEC, which in, say, Binance case, it might mean that they forego the US market more completely than they would say they already have. In the case of Coinbase, who are very much US-based, although they have threatened to leave the US in recent months because of the lack of certainty, that they could move somewhere down that path. A lot of these issues have been priced in, of course, to a number of things. So Coinbase received what's called a Wells notice a few months ago, which indicated that the SEC was planning to bring proceedings. Binance has been in the firing line by a number of regulators over the last little while. So I don't think this is particularly surprising to people in the industry. As to whether it means that America becomes too hard a place to do this business, that doesn't necessarily mean it doesn't happen everywhere else in the world, but we all watch with a great deal of interest.
We certainly do. Thanks so much for your time, Jeremy. Appreciate it.
Thank you, Madison. Great to be here.
Apple broke a drought on releasing first-generation products this week, beating competitors, including Meta, to reveal a virtual reality headset. Deborah Lambie analyses Apple stock. Hey, Deb, thanks so much for joining us.
Hi.
Would you pay almost 6K New Zealand dollars for this sort of high-tech ski goggle thing?
Yeah, these headsets are not cheap at all, right? And this really, at 6,000 New Zealand dollars when they come here, or more than 6,000 New Zealand dollars, this is really not a price point for the consumer market. And I think at this point, more targeted at an enterprise customer. And what we know with new products like this is over time, often companies will start with a higher end market and then use their learnings to roll out a lower price model over time. So, for example, if you look at Tesla with their Model S and X, which were at a premium price point, they then after that rolled out a model at a lower price point. And if you think about Apple's history looking back, what we saw after the launch of their AirPods Pro was a second-gen version within 3 years, and that came in at a lower average selling price. So there is potential that the next-gen version will come in at a lower price point, which may be helpful for adoption. But then also kind of, while we're talking around cost, interestingly, if you look at Meta's headset cost, that's around $400, the entry-level one, $400 US, and their higher-end headset is around US $1,000. So that's still less than a third of the price of Apple's Vision Pro. And that hasn't really actually helped Meta's adoption of their headset so far. They're the leading player, and it hasn't been an easy rollout at all for them. And then data has shown us that it's been really difficult to keep users engaged, and that actually 50% of Meta's Quest headsets were unused 6 months after they were first purchased.
Apple's obviously expecting at least someone to buy it at that pretty high $3,500 US price point. What does that tell you about Apple's pricing power?
Well, I guess if we think about Apple's revenue trends, I guess over the past couple of years, what we've seen is that iPhone revenues saw a massive boost during the pandemic. And now we're lapping really difficult comps. And also the global smart iPhone market has actually been really weak on macroeconomic factors. And then if you look at iPads and Macs, these revenues have actually been quite lumpy based on the cadence of their product releases. So I guess when you think about any decline in revenues that we've seen from Apple, I would say that's more kind of cyclical driven rather than actually a structural issue. And so if you think about with the pricing of this Vision Pro headset, if Apple's revenue last year was around, I think, 390 billion. So if they sold 1 million headsets, that would be only 3.5 billion, which is less than 1% of Apple's revenue. So that wouldn't actually be moving the needle for Apple at all in the near term.
So you don't think it could offset any of these sort of declining sales that they've seen in recent years in iPhones?
Well, I think the key is if those sales are more cyclical rather than structural over the long term, I think we would expect structural growth to that. And then the key debate really is around where this could end up. And if you talk to a bull or a believer, they would point to the virtual reality headset market growing to 100 billion by 2030, which would actually imply mass adoption and that it could potentially be Apple's next significant product. But then if you talk to a skeptic, they would really shrug this off and look at all the hype we've had around this back in 2016, look at the issue that's Meta has had with its rollout, and they would say this has been a really difficult area to get mass market adoption. So this is an area that we as investors will be watching really closely. Is that uptake going forward? And then also key to that will be killer use case applications. And what we've seen at the conference so far, the Worldwide Developers Conference with Apple, is the use cases that they have rolled out haven't necessarily at this point been enough to really switch us over to that mass market adoption. So if you think about if you're going to spend $6,000 on this headset and replace your kind of TV, PC, surround sound and camera with this expensive vision set, you're going to need a really good use case. And so there's still a period of time between where we are now and when the product's released in 6 months. So developers will be developing apps. So we're yet to see what use cases might emerge. But I think key to adoption will be, aside from price, the development of those killer app features.
Deb, it sounds like you're more skeptic than bull on this. Is that where you sit?
I guess I think there's just more to learn, right? And if we think about the share price on the day, the share price is actually closed. The share price of Apple closed down around 1%. So I think given that the launch is a while away, given the price point is high, given we need to see kind of that killer app feature to come yet to encourage mass adoption, I think for investors it's going to be a bit of a show me story. And in the near term, we expect it'll be a small contribution to Apple's revenue, and then longer term, we'll be monitoring it very closely.
Now, I don't know if this is a dumb thing to bring up, but as a woman, I look at this thing and I just think, if I put that on and wore it to work, it would ruin my makeup. It'd be so annoying to have to wear in a meeting. Like, please tell me you've thought of that as well.
Yeah, well, I think, that's interesting. Like a few things that people said, the ski goggle-like appearance with the form factor has been, I guess, described by some. Other people have said that it looks actually surprisingly sleek compared to what else is on the market. And then also another kind of related kind of issue that has been raised is that the battery life at this point is only 2 hours. So you can only use it for a short period of time before it needs to be recharged. So these are things that I think with next generation versions will probably improve over time. But there's a lot to learn and a lot we don't know.
Yeah, we'll have to wait and see. But 2 hours doesn't sound like a lot. That's not even, one of those Tom Cruise movies these days. They're almost 4 hours at this point.
And it's definitely not a Netflix series.
Definitely not if you're binging Suits or something. Hey, thanks so much for your time, Deb. Good to chat to you.
Thanks.
All right, there's been a lot of local stock market news this week, including Auckland Airport increasing its landing fees to help fund its near $4 billion infrastructure pipeline. Well, airlines hated that, even more than they hate each other, apparently. Air New Zealand and Qantas teamed up to take on the airport, saying it should use its own profits to pay for renovations. And Infratil bought out Brookfield's stake in One New Zealand, better known to all of us as Vodafone New Zealand. It successfully raised $750 million from institutional investors this week to do it. Retail investors, you'll get your own $100 million slice of an offer next week. We'll talk then. Now go and put your money to work. Thanks for watching Markets with Madison, the New Zealand Herald show for interested investors. If you want to stay up to date with financial markets, click the subscribe button below and you can watch our other episodes here. Stay up to date with all the business news and numbers as they land on nzherald.co.nz.